Yo, welcome to August 14th, 2024. Today's video is going to be a trade recap over the trades I took today. So today is actually CPI, and I did take, well, technically I traded two models, the first one being a winning and the second one being a losing. So let's get right into it. Alright, so the very first model here today was based on us taking out CPI data lows. So this one was actually on stream, and let's go over it right here. So on the 15-minute time frame here, right? This was what the candlestick chart looked like at the 10 o'clock open. So based on this 4-hour candle closure, this 1-hour candle closure, this 30-minute candle closure, and this 15-minute candle closure, I can anticipate for prices to take out this 15-minute, 30-minute, and 1-hour low. However, the 4-hour low is this one right here. So 4-hour low is actually it's technically CPI data lows, and notice how all four of those time frames are in alignment with each other. So the higher time frame is telling us that we are drawing lower, and on the 15-minute, the 30-minute, and the 1-hour, it's telling us that we're going lower as well. I also do want to note how we had this 15-minute fair value gap right here. So based on the fair value gap theory that I went over on my YouTube, you guys can check that out in a separate video. But based on how this 15-minute candle closed here and how we created this 15-minute fair value gap, I treated this 15-minute fair value gap as a breakaway gap. And that means I want to see prices, open, trade into some sort of lower time frame PD array, and then take out the 15-minute low first. And then after we take out 15-minute low, I don't care if we, retrace back inside this 15-minute fair value gap. But what I am trading is this move down to attack that 15-minute low, because I am anticipating for us to take out this 15-minute low before we retrace back inside this 15-minute fair value gap. So, based on those confluences I had in mind, I was going to go into the lower time frames to find some sort of entry pattern, right? So on the 5-minute time frame, we do have a 5-minute fair value gap. So this trade here was based on the 15-minute model, the 30-minute model, the hourly model, and the 4-hour model. But my entry pattern here is on a 5-minute fair value gap. So whenever prices retraces back inside this 5-minute fair value gap, right, I'm anticipating for us to trade into the 5-minute fair value gap and then continue lower here. So on the lower time frames, you guys can see a clear depiction of what actually happens. So on the 1-minute time frame here, we open up at 10 o'clock, right? And we dig up into the 5-minute fair value gap. This 5-minute fair value gap is my entry. My stop loss is at this 1-minute swing high here, which is basically the 5-minute high. And I believe I took 12 contracts this trade, and so we open up, we kind of meander around for a little bit, and whenever prices close here at 10:04, I noted out that we closed above the consequent encroachment of this 5-minute fair value gap. So whenever prices did that, that was when I didn't actually close the entire position, but I did take off half of the position size just so I can mitigate risk. And right after I closed the positions, prices actually starts starts moving towards my draw of liquidity and takes out the objectives, which was the 15-minute low, like I said, the 30-minute low, the 1-hour low, and 4-hour low. I took standard deviations from the swing high to the not actually swing low, but the lowest down close candles low. So based on this retracement here, I just took the standard deviation, and I actually took off full positions off at the 4-hour / CPI lows. What I could have done was actually place, one limit order here and one limit order here for the negatives, for the standard deviations. But yeah, I didn't have my full size whenever prices took out these partials, because I took off, like I said, I took 12 contracts this trade. I took off 6 whenever we closed above the consequent encroachment of the 2 minute or of the 5 minute fair value gap. And what's it called? I took off, I believe, 4 at the 15 minute / 30 minute / 1 hour low, and I took off 2 at the 4 hour and CPI lows. And yeah, that was the very first trade for today. This is a plus setup. Very, very nice setup. And keep in mind that it's also in confluence with the 8 hour power of 30 as well. So we had the 15 minute, 30 minute, 1 hour, 4 hour, and the 8 hour. So there's multiple time frames that are in alignment with each other here. I would give this probably like an A setup. Very, very nice setup. All right. And the second trade that I took today was actually based off of this candle right here. So notice how we closed here on this hourly candle, right? What I do want to note is on the 10 hour time frame, we retraced back inside this 10-hour fair value gap, and look at how prices reacts to the consequent encroachment of the 10-hour fair value gap. Basically perfect retracement down into it. So I noted that, and so prices retraces back inside a 10-hour fair value gap, right? On the 6-hour time frame, notice how we close here. Very, very bullish candle closure. So based on that 6-hour candle's closure, I could anticipate for prices to take out that 6-hour and 1 hour low, or sorry, 1 hour high. On the 15-minute time frame, you can see it here as well, how the 15-minute time frame, the 30-minute time frame, and the hourly time frame is aligned with the 6-hour power of 3. And again, based on the fair value gap theory, I can treat this, I was treating this 15-minute fair value gap as a breakaway gap. So I wanted prices to open up on this next 15-minute candle to do something like create the open, create the low into the high, and then the close. That was basically what I was trading. I didn't want to see prices do something like this. So we open, we leave the high intact, and then we take out, and then we retrace back inside the breakaway gap. That is something that I am not anticipating. And note this 30-minute fair value gap here as well. We also are treating this 30-minute fair value gap as a breakaway gap, and this 30-minute inversion or 30-minute SIBI here, once we close above this SIBI, we can treat it as an inversion, and this is just a really good signature of when prices are like a reversal pattern almost. So on the lower time frames here, I'm trading based on this 15-minute power of 3 because it's in alignment with the 30-minute, the hourly, and the 6-hour. Sorry for going back and forth, but I really want to drill it into you guys' heads. On the 2-minute time frame here, I take my entry, so I gave this model two tries. So my very first entry here was based on this 2-minute fair value gap. So whenever prices retrace, wait, was it a 2-minute or 3-minute? I'm sorry, it was a 3-minute fair value gap. So whenever prices retraces back inside this 3-minute fair value gap, I wanted to see prices retrace into the 3-minute fair value gap, and then take out that 15-minute high. However, I noticed, okay, prices is meandering around, and we kept stalling, and then I eventually got stopped out here. But I was able to mitigate my risk here. So whenever prices closed at, I believe it was 12:05, I took off half of my positions because there was a new 5-minute fair value gap that got created here. Not not got created, but we closed in the 5-minute time frame, and it suggests the idea of us retracing back inside this 5-minute fair value gap. So I was able to actually mitigate my risk on the second trade of the day, and on the second attempt, or on the first attempt. But on the second attempt, I actually took my entries on the 5-minute fair value gap whenever we actually did get a retracement back into it. And I was treating this 15-minute high here as a stop loss. So I wanted to see this candle's high, this 15-minute candle's high, not get revisited. And we actually got a revisit to it, and I got stopped out. But this trade right here is, like I said, this would be a grade setup. It's in confluence with the 6-hour. We have a reason why we created the 6-hour bullish power of 3, and the 15-minute, the 30-minute, and the hourly time frame are in alignment with the 6-hour as well. And you know, there's breakaway gaps, or at least I'm treating them as breakaway gaps. And yeah, it's overall was a pretty good setup. I wouldn't have changed it at all, to be honest. Today I was able to manage positions and view the market information as just simply as information. I try to stay away and try to stay clear from, you know, letting my emotions get control of me, because if I do, then I would have, you know, been hesitant and scared to perform. But like I said, this is both of these trades here are actually A quality setups. It's just the second one, it happens. And I also do want to note how this hourly FAG low here that I noted out, it was also a draw for me as well, because I wanted to see prices rebalance this hourly FAG. I wanted to see prices rebalance it, but we didn't go up into there, and yeah, I got stopped out. And do I want to go over what I am anticipating for tomorrow? Okay. So for tomorrow, it looks like we are creating a daily bullish fair value gap right here. So I am anticipating for prices to I actually don't want to see prices retrace into this daily fair value gap. I want to see prices treat this as a breakaway gap, simply based on how we are closing here on the daily time frame, because I want to see prices, you know, create the open, the low, and then the high, and that's what I wanted to see on the daily candle here. Maybe coming into next week we might get a retracement back into here, but I highly doubt it, to be honest. So tomorrow I am anticipating some sort of expansion, to be honest, again, and to leave this daily fair value gap as a breakaway gap. And with that, that's going to be it for my trade recap for August 14th, 2024. I gave you guys a little bit snippet of what I am anticipating for tomorrow. Thank you guys so much for watching, and I'll see you guys next time. Peace out. Boom.